what rating agencies are making of the finance minister's statement of accounts and the financial health for the Indian economy. Art Wu, Director Sovereign Ratings, Fitch, joins us on the show from Hong Kong. Art, great to have you on the show. Really appreciate your time this afternoon. What is your overall view on the budget? Does it meet your expectations at this point?
Yeah, I think it does meet our expectations. I mean, we weren't expecting any big surprises as far as this budget was coming out. The government had sort of outlined they were going to look to lower the budget deficit in fiscal year 14, and they brought the target to 4.8% of GDP, and they had telegraphed that following the CalCAR committee recommendations. So I think really no surprises there. I mean, it's going to be a difficult task, obviously, given it is an election year. So we'll just have to wait and see.
In fact, yes, that's probably the biggest point, that it's an election year and there could be slippages. But the counterpoint that a couple of people presented yesterday was that the increase in planned expenditure is to the tune of 30%, and they feared that they may not even reach the 30% mark, forget slippages. Is that a reasonable assessment, or do you believe there is a serious fear of slippages on the expenditure front?
Well, it's very hard to tell on the expenditure front. They've announced a target, and I suspect that's a target they would want to achieve.
Right. What about the fiscal deficit targets that have been laid out? 4.8 is the target for FY14, and FY15 they're looking at 4.2. Do you think these targets are realistic?
Yeah, I mean, I do think they are realistic. The question comes down to the risks that revolve around them. I mean, obviously, if growth turns out to be worse than what they are targeting, that could obviously put pressure on revenues. Obviously, they're looking for a large amount of privatization, telecoms, and divestment of state assets, and obviously there's risk that that may not be met. And obviously the subsidies remain a risk, obviously, in the sense that we could get higher fertilizer prices, higher oil prices, and that could impact subsidies. And also, you know, there's a question mark over whether, if oil prices do rise, will the government be able to deliver, you know, higher prices in fuel? Right.
You have mentioned, of course, that India's public finances are vulnerable to further slowdown of economic growth. Were you disappointed with the 4.5% that came in, and what are your estimates for FY13 and FY14 GDP growth?
Yeah, I have to admit the 4.5% year-on-year rise in the October to December quarter was slightly on the weaker side. We were expecting it to be stronger. So obviously the economy has certainly fallen into a difficult period in the economic cycle. In terms of what we were expecting, to be quite frank, we were looking at we were looking for stronger numbers for, you know, the current fiscal year and the next fiscal year. We were previously targeting around 6 to 7%, 6% for the current fiscal year, 7% for the next fiscal year. So we'll have to probably revise those numbers down once we've had a chance to sit back and look at the numbers more carefully.
Right. All this while, you know, there's opinion in the market that the growth cycle has pretty much bottomed out, with yesterday's numbers coming in at 4.5%. Do you see this just as, you know, the trough, and maybe a recovery will get staged from here, or, you know, the numbers raised doubt on that front?
Yeah, but you're right, the numbers probably do raise some doubt, but obviously, you know, I think we're probably reaching the trough, or coming near the trough.
Would you have been more happy with the more definite timeline on GST?
Well, you know, this has been an ongoing process, the GST, the direct tax code. So I really don't think it's a surprise that we didn't get any, you know, clear indications of how this is going to pan out and be implemented. And I didn't think we were going to be able to in the first place. So I think it's an ongoing process, and it just sort of highlights that the public finances overall remain a weak spot in India's sovereign.
Art Wu, really good having you. Thanks so much for taking the time out and joining us and giving us that perspective. Really appreciate you taking the time out. Okay, that's this Director of Sovereign Ratings of Fitch giving us his view.